What's going on, good people? Christopher Ings, TexasWest Capital. Tillman and Andrew. Tillman is really intent on moving on, guys. This is probably the last time you see him here. He wants to join the Money and Mustaches show. I told him it sounds like a scam. I told him they probably focus on XRP and Flare. He wants to do it anyway. It is what it is. So we might be looking for another beard here.
Chris,
anyway,
you asked to join. You asked to join the show, and I'm sorry, we already have a Chris. We don't. There is no universe. That my universes are colliding. Independent George is getting killed here. I have to go with my heart. And listen, beards are great, but mustaches are better. So I'm trying to convince Andrew to go. The next bet Andrew's making is he's shaving everything except the mustache.
Yeah, I'll do it. Why not? I'm down for just about anything. Just to see how fun it would be. Yeah.
Oh man, listen, lots of great stuff happening this week. Again, we've got the PNC Bank. That's the big one. I say it's a big one because again, it's another thing that we've been talking about, and here it is happening already. You guys had mentioned, probably damn near a year ago already, about the likelihood that, that as Bitcoin continues to get up here, that the banks just become one account, right? You don't have to have like multiple accounts. And PNC's had that partnership with Coinbase now where their select members can now trade Bitcoin directly out of their accounts. I mean, that's crazy, right?
It's PNC has been on a journey. I don't know who the leadership is there. Be interesting to talk to Bitwise on this because PNC onboarded Bitwise's Bitcoin ETF about a year ago. So that was very, very early for a quote unquote regional bank of PNC size to add, Bitwise's. And it was the only Bitcoin ETF that they onboarded at that moment. So they onboarded it onto PNC. And so now we're getting, them being the first bank of their size, again, considered, a regional bank to offer this type of, Bitcoin, which is called spot trading or whatever it happens to be associated with Coinbase. They're the first to do that as well. So somebody there is fairly crypto forward thinking. Yeah. So I find that really interesting. I also find it, the fact that they're partnering with Coinbase, I haven't read the fine print, but I mean, the reality is that if you've got money at Coinbase and PNC and you start to look around, you're like, well, wait a minute, PNC's offered me this over here on my cash and Coinbase is offering me this on a cash equivalent with USDC. Where am I going to park my cash? That'll be interesting to see how that particular part of the partnership or part of the process works out. Where and how does money flow, and at what pace does it do that? Right. The truth of the matter is that your typical PNC customer is probably 60 plus. My parents bank there, and they're in their 70s and 80s. So again, that's that's your typical customer at a place like that. So it's great headline and it's progress, but at the same time, I don't know at what scale and pace we're going to see meaningful back and forth.
I will say, like Andrew said, progress, not perfection. Who cares? They're so far behind the curve at this point. I've been exposed to some things here recently from integrated services perspective, let's call them, that have blown my mind. And BitGo is one of those. I think that, if go look at BitGo's pursuit of a bank license and go watch a demo of their platform, and you determine how far behind the curve traditional banks are, because I'm here to tell you, integration is here. And I mean integration at a level where we've not ever seen before. And it's akin to a lot of different technological innovations, disruptions, if you will. And one of them that comes to mind is the whole streaming songs, streaming video type of, it started off very illegal. Everybody that was doing it was breaking the rules. Napster, LimeWire, all those, basically like peer-to-peer stream services. And then it got regulated, and now it's the way we do business. And because it got regulated, companies like Netflix put companies like Blockbuster out of business. And so you take what's happening in crypto and you take kind of the evolution of banking services and the integration of all things financial. You look at the legacy network that they're working off of, and then you look at these new systems that have instant settlement. They're open 24/7, 365. They don't have a bunch of humans that you have to rely on to shuffle paperwork to get things approved. They're all like AI driven. You scan things and it says you're good. It's just it's not even in the same ballpark, guys. It's like a different universe of financial services and integration. And so then you go to PNC and we're hyped up because they finally said, yeah, Bitcoin, I mean, come on. It's like, I think we're about to see an extinction event in the banking services side of things. Because do you know why? Because I think the banking license is about to get a lot easier to implement. If you want a banking license and you can prove that you have a software suite that can manage the flow of smart contracts and money and liquidity, then you can be a bank basically, as long as you're a good person. And I think that competition is much needed in that space. There's a reason why, rightly or wrongly, people call it the banking cartel, because it's like, how can you borrow money from the Fed window at X rate, lend it out at Y rate, and not reward your depositors that you're lending their money out with some of the yield that is being generated through that liquidity event? And it would be no different than if you were closing on real estate and you had no incentive to close. You were just paying closing costs and there was no upside to the owning the real estate. Well, you would never do it, right? There has to be upside for all parties for transactions to go forward, for there to be a natural law of attraction for people to want to do things. And the cat's out of the bag with DeFi. Like you look at any DeFi protocol, name me one, and I will show you a curve of total value locked that looks like this. Why? Because people need it and they want it and they're using it when it's available. No different than anything else like Bitcoin. People wanted it, they needed it, and they started using it when it became available. I just see banking services having a major disruption event where brick and mortar is dead, and any company that was built on the back of brick and mortar better figure out how to shift, is the way I look at it.
So Dave didn't convince you otherwise last week?
I would double down on that statement as many times as I needed to. I think Dave is a very smart technologist and market analyst. Like, he has a lot of expertise that I do not have, and I will give him credit. And he sees something obviously that I don't see from a duplication of efforts perspective. And what I would say by that is like, I look behind the curtain of some of these companies that have the head starts, Coinbase being one of them. And I go, if I'm in charge of Coinbase, I'm not giving up 10 plus years of R&D, fumbling the football, pissing off customers, doing bad things that I've learned from. I'm not giving that playbook to the newcomers on the street so that they can come on the scene and not stub their toe. Like, the barrier to entry in a competitive market is the body of knowledge that you learn in breaking through market barriers and creating new markets. Coinbase and BitGo and some of these other companies are so far ahead of PNC Bank. Why would they share that information with them? Why wouldn't they gobble up market share, which is the most valuable thing they can gobble up? I think that's the natural law. I think I think it will happen whether you want it to or not, is the point.
Yeah, a couple of points. I wonder, because I'm certain it's happened. how many times and how many conversations that may not have gotten anywhere near serious, but were certainly floated. How many times has someone somewhere in some way, shape, or form attempted to have a conversation to buy Coinbase, right? I guarantee that's happened a lot, right? But obviously they're not going to talk about it because at what different valuations, and so you don't want to screw with the growth of Coinbase and their current valuation, so you don't talk about that if you're Coinbase, right? But I guarantee you that's happened. Number two, there's a
what do you even mean by that?
What do I mean?
They're a S&P public traded company. Are you saying like a hostile takeover in public share purchases? Like what does that mean?
So it wasn't long ago that Coinbase was worth a third of what they are now. Like right now, they're worth like $85 billion. Well, when their shares went from 300 down to what was the low? What were the lows, Chris?
Like 146 or something like that. Yeah.
Okay. It might've been lower than that. Either way, it was worth $40 billion, 2 years ago or something. Who's to say that there weren't approaches associated with buying Coinbase?
Oh, I would agree. There probably were approaches. I guess my question to you is there any universe where that would, I think that's so short-sighted.
The point I'm making here is that the only way that there's a version of what Dave talked about last week, where the banks continue to rule, is if they find a way to buy Coinbase or buy Kraken or buy whatever, and then integrate them into their thing, and then basically dumb them down to what they are now. That's the only way that this gets stopped. I'm reminded, because I'm a movie guy, and this is why I think this movie was so brilliant, because it focused on a big part of the Facebook story that nobody really knew about. Everybody kind of knew the story, but what they didn't know is the role that Justin Timberlake played, having to do with Napster and his involvement in Facebook very, very early on. And that conversation that they had at dinner for the first time, and the other guy was like, well, you didn't kill the radio companies, they won. And he looks right back at him and he says, do you want to buy a Tower Records, Eduardo? Right? Like, no. And half the people listening to this don't even know what Tower Records is anymore, right? I remember
half of the people listening to this don't know what a record is.
Yeah. 10 to 12 years ago, first of all, there were no music stores really left. The only one that still had some CDs and stuff in it was Barnes and Noble, of all places. So isn't that poetic? Right?
No, Best Buy, man. I would roam the Best Buy aisles looking for the new CD.
But that's only because they had such scale that they could still offer that little thing that it was, they didn't make any money off. And now it's completely gone, right? Completely gone. So the question then becomes, what's the period of time where the banking and financial space is so disrupted that banking as we know it now is completely different.
How can we say when is the time when it's disrupted when Coinbase has 100+ million customers, Binance has 200+ million customers? There's 500 million people out there that are using crypto exchanges as their banks. Literally 500 million.
For the pace and speed at which this is all happening, to me, here's a marker, right? So I can talk about our business at Arch Public. 2 years ago, when we would have different packages and take payments, like 90% of those payments would come via some normal particular means, a banking means, like a wire transfer, right? Well, now we're at the spot where wire is actually the probably the smallest percentage of how we take payments. Like, it's all crypto or USDC, or because people have gotten used to it, right? And our typical customer is 40+ years old, right? So they've gotten used to it, they've gotten comfortable with it. I'm just going to shoot over some USDC or some USDT or some Ethereum or Bitcoin, and there's a simplicity to it. Whereas 2 to 4 years ago, those same people are like, I don't know, I push the button, but I'm really scared to do this. I've never done this before. I'm not used to it. Now it's turning into second nature. So again, happening faster than you would think. So it's to me, it's the story of all stories.
To me, it's the glue that's connecting markets. And if you look at the thing that I always like to look at the heavyweights in the room, see what their body language is when certain things are said, when certain things are done. And it's clear to me that they want Bitcoin and they want crypto and real world assets to be the driving force in bridging the gap between their archaic instruments that no one uses anymore and this new set of tools. And so if you think about it, what's the likelihood that the S&P 500 remains a viable investment vehicle without it being digitized? At some point, it becomes irrelevant because of that. I'm not suggesting that's anywhere close to right now, but I am saying that if the entire world becomes digitized and has the benefits of that built in, then why, and there's this one outlier that's going, line in the sand, staff in the ground that you shall not pass. Well, you're going to do it our way. Well, markets move away from that. The markets like free flowing liquidity. They like interconnectivity. If you can connect money pools together and allow people to pick and choose markets that they want to move in and out of, that is the holy grail. Why? Because the people who own the rails make money every time it moves.
Yeah.
It's transactional. It's all they're looking to do is clip huge volumes of money that are moving from one place to another. That's it.
Whether it was a little video or some sort of static image, but with iPhones, right? So there was a video that showed a bunch of things on a desk, right? And then they would just disappear into the end phone, your calendar, your Rolodex, your, there's like 17 different things that would disappear. Mm-hmm. We're at the point now where your bank branch is disappearing into your phone.
Well, listen, I bought this cool thing for my desk because in my heart, I want to be romantically analog.
Yeah.
You see how much I've used it.
Yeah.
Whether it's natural law, I carry this thing around with me everywhere I go. Why would I rely on something that it doesn't have any of the benefits? You know what I mean?
We could, for the next 40 minutes on this show, we would never stop thinking of things that this has replaced.
Yeah.
Like maps in your car. Those don't exist anymore. When I was 25 years old, there was no digital version of this thing.
When you went on a road trip, you were highlighting the route before you went.
Well, and even back then, if you were really on the cutting edge, you'd print out a map quest, right?
Pages of map quest,
Yeah, and they'd have turn here and turn here, but you'd have to look at it, right? You have to look at it. So it's just it's extraordinary. Again, you put a bank branch up on that desk, and that's where we're at. It's
solitude is not the same as it was in the past. Mm-hmm. You could lock somebody in a room with this for their entire life, and they could build a $1 trillion company literally by themselves, and they could communicate with AI. It wouldn't ever replace, obviously, a real life with real people. There's a human contact needed, but from an intellectual stimulus perspective, there's endless stimulus. I mean, you could get lost in that machine for a lifetime, and it could be a tool, like we've said, that with AI now. I mean. You could have, that's 1,000 employees in your hand. That's that's a professional lawyer, professional accountant, professional marketer, professional engineer, professional everything in your pocket. It's hard to ignore those types of benefits. And I think crypto smart contracts or real world assets. That's code word. I'm just giving you guys, from my vantage point, the cynical rip the sheet off of the wolf to show you the wolf. Um, that's code word for we need you to start trading our assets again. I really believe that, and I really think that the.
Go ahead. Go ahead.
I just was going to say, from a technological bridge perspective, tokenizing stocks is literally the easiest thing to tokenize because it doesn't come with real world custody issues because the custody of the paper is already in the hands of the broker anyways. So no one's expecting, or there's no risk in chain of custody as it pertains to the stock certificate because no one deals with those anymore or settles with those. If you're gonna test the market for real world assets without any of kind of the complications of trying to do like a car title on the blockchain, this sounds really good. It's a story that everybody's gonna bite on, but really the motive behind it is so that instead of you choosing to go through a broker to buy S&P shares, you just buy it on Coinbase. And to Andrew's point earlier, you're able to harvest a different dynamic of customer because now there's integration across those brands, right?
So there's somebody that made a comment, the bottom end of his comment, Coinbase ain't losing clients or market share to banks. That's the point we're making. Coinbase is harvesting share from banks, and that's the reason why banks are doing they're announcing things with Coinbase so they can find a way to potentially stem the tide.
If I was a bank right now and I owned brick and mortar facilities like PNC, Wells Fargo, Bank of America, all the ones like you just drive around any major city and you see them on every corner, I would literally sell every piece of real estate I had right now. I'd buy crypto and I'd turn into a crypto exchange and I'd use all of the real estate proceeds as collateral against my exchange. And I would rebrand literally like I was already extinct because they are. And the slower you adopt, the less market share you're going to get. Period. The end. I'm just telling you right now, that may seem like a radical move for some of these banks, but they're dead if they don't do it. This is a matter of survival. This is like where in a gunfight, the guy is drawing, you're drawing dead. He's got the gun out of his holster and it's coming at you quick. What do you have to lose? You're already dead in the sights. You better start pulling your gun out and doing something. You know what I mean? And
it's the same concept where, let's call it malls in most cities just are either zombie lands or they've been shut down or they're being reconstituted somehow for their real estate value. The same thing's going to happen with bank branches over the next 20 years. You're going to see bank branches effectively close down and that real estate will be sold and that building will turn into something else.
Well, because it's a continuation of this gobbling up everything.
Yeah,
right?
exactly right.
The bank's here.
Yeah, there's no reason if PNC, like me and the Bluegrass in Lexington, if there's 6 of them here, there's no reason for them to be 6 of them 10 to 15 years from now. Maybe 2, or maybe 1. So if you absolutely have to go to a branch, no different than now there's basically like 1 DMV here in town. There used to be like 4. If you absolutely have to go, then okay.
Their branches would be more profitable and more relevant if they turned them into a competitive coffee shop to Starbucks and made a better cup of coffee and allowed Bitcoiners to sit in there and talk Bitcoin cafe. Like it's irrelevant to go into a branch, really, unless you are someone who deals you own a bunch of car washes or vending machines where you collect change and have to take physical change. Everything's done electronically. I mean, for heaven's sakes, everybody's taking pictures of even checks until you don't even have to take checks and deposit them anymore, right?
Right. Where we're headed is such a paradigm shift, but even at times we don't even realize how much of that shift has actually happened because it's almost by osmosis. Like we just said, like people are just, taking pictures of checks, right? Like you don't need to go cash a check.
But there's companies out there. We're in the space every day.
Yeah, right.
There's companies out there that are doing groundbreaking stuff that I've never been exposed to before, like groundbreaking stuff, like BitGo. I'm telling you right now, bet $10 to $1 that they are going to get a banking license, and
they're going to get a banking license, and they're going public next year. I mean, so they've been around for a long time in the space. They've been a institutional monster in the space. Goldman Sachs bought a significant amount of their company, like to the tune of nearly 30%, I think 3 years ago. Well,
I can tell you this, they're bringing a level of ease and professionalism to the space that I have not seen yet. And it really was very encouraging, because it's finally the standards, right? You talk about like insured deposits that are better than the FDIC, way better than the FDIC. You're talking about integration. You're talking about instant settlement. You're talking about price sourcing and competitive price. You're talking about just a really a user-based platform. Like somebody, when they built everything, they go, how do we disrupt the market and give all the power to the participants? And, when you do that at a technology level, it's like Napster. You didn't have to tell people that they wanted songs for free. They did. And people respond to wanting banking services that are fully integrated, low cost, user-friendly, user-based, all of those things. I think crypto in particular has been wanting for a long time. Name a company where you could actually call someone and get them on the phone and get them to help you with a problem. It's been zero. Well, we're here, guys, and we're not here with little companies. We're here with big companies that have big backers, that have big pocketbooks, and are all about market share adoption. So people have been asking me a lot lately, a lot. You think we're going into a bear market? Do you think we're doing this? You think the 4-year cycle's dead? I have never seen more technology being integrated and built than right now, by a factor of 10. If one thing on the list of the last 20 that I heard had been accomplished, I'd be flipping out, and 2-3 years ago going, we've made it, guys. I mean, the fact that you can use DeFi protocols and stake, lend, all of the things you can do on just Coinbase alone, you would expect that at some of the lowest level kind of peripheral exchanges. This is the behemoth of user that, they've got the largest domestic user base of any of them, and they have integrated this stuff at the fabric of their exchange level. They're doing ICO launches. They're doing all this stuff. So am I encouraged? I'm so encouraged that I can't shut up about it. And I'm getting actually at family gatherings more obnoxious than I ever have been about it. So, yes, I'm encouraged. I think adoption is coming.
And I mean, this is all a product of, just technology, right? I mean, technology advances exponentially, and I think we got to this point here, I've said it a few times, where you've got so much going on at one time right now that people are they're not noticing it. If it weren't for us actually actively talking about it weekly, most of this stuff would be like just this kind of little glancing thing that goes off in somebody's head real quick, and they forget about it, and they wake up 5 years from that like, what the heck just happened?
Well, Chris, I don't even think they're going to do that. I think they're going to wake up 5 years from now and go, man, banking has gotten a lot easier over the last 5 years. They've done a good job. And they won't even know what they're using.
This whole time just like flies by, and they don't even recognize that it's happening, because it's happening so quickly and on so many different levels. And what does that lead us to? It leads us to what we're getting now. You brought up the RWAs and everything's being tokenized. I mean, that's just this hyper financialization that we're getting, right? And for people that are market participants, I've been for a very long time trying to, remind people that the markets are not the economy, right? Because everybody's like, oh, the economy is this and that, so the markets have to do this. And I'm like, no, the markets are leading the economy today. And that's just going to continue on as the hyper financialization continues, because once you start tokenizing everything, I mean, that's what people are going to be focused on. Anything, the government's going to keep printing money, and that money's going to keep coming in exponentially higher. It's going to need somewhere to go.
They're going to
extra
only tokenize things at the beginning that are electronically repossessable.
Mm-hmm.
You see what I'm saying? And so what does that relegate it to? It relegates it to digital assets and stock certificates. That's really those are the only things that are going to be digitized for a long time. I'm just telling you, there's been a lot of smart people trying to digitize real estate for a long time. The problem with that is somebody still has to go down to the county courthouse and file the paperwork. We're not there yet from a government perspective, a systems perspective. And that's going to be the last thing. Who adopts it last? Government adopts it last. Businesses adopt it first. Retail adopts it first. Businesses adopt it second. Why? Well, because businesses see the delta that they can harvest in terms of efficiency, and liquidity and all the things, the opportunity at hand. So it's happening, but real world assets are just going to be another disappointing buzzword. Honestly, I'm already sick of hearing it because it's way too broad of a term. Just call it digitizing securities. That's really what they're going to do. That's it. So what does it look like? Well, they're going to open up ways in which they can lend you money and collateralize your crypto. Why? Because they want you to default. They want to take your crypto from you. That's the real world assets that they're talking about. Coupled with, they want you to borrow against your stock positions in a digitized manner so that you can borrow and take leverage positions out so that they can sweep that leverage off the table and charge you a lot of it's all about the harvest, guys. Money is like a farm. These guys don't own the farm without the harvest. The harvest is the farm.
See, and you bring that up about the collateralization. The U.S. Commodities Futures Trading Commission, I think you guys probably heard, they're launching the pilot program that's going to allow spot crypto assets to be used as collateral. Yeah, on futures exchanges. So, I mean, there we go, right? We're already getting into it. Heaven forbid you get called on that. Say goodbye to your crypto, whatever you happen to be using there.
So that's their idea of real world assets, that the futures contract has been tokenized. Okay. No, it allowed me to put my collateral up against your futures contract. That's what I'm saying. It's not what it seems, guys.
The biggest financial innovation in these 5 years. So let's start at the beginning of this year through 2030. I think has already happened. I think the Coinbase JP Morgan wallet to wallet partnership. I think that will end up being the biggest innovation that happens, because that materially changes, that completely puts you here, right? And so once you get comfortable wallet to wallet in USDC and all versions of stable coins, at that point, you're no longer sending a wire anymore because all of it's being run on stable coins. And they've embraced that. The biggest bank on the planet has embraced that. And so every other bank in the entire world will eventually embrace it. So, we talked about it when it happened that, JP Morgan, Coinbase are going to do this, they're going to do this. But that wallet to wallet functionality, that you're going to have wallets at both places and you can move money from your bank account to your wallet over to Coinbase's wallet and back and forth. That is just a game changer in ways that we haven't thought of yet. So just a huge deal. And as we see continued announcements of this or that, or bank this or bank that, that truly was the beginning of it all. And so it's to me, it's the growth of that particular move. But
I don't even think, like, one of the things, to your point, I think that this is like the first iteration of that integration, right? And what's eventually going to happen is that the integration looks like every single company offers the entire suite. And it's really just about brand marketing at that point, right? Pick a brand, because that's what it is now. It's like you're just buying brand loyalty in the marketing efforts that you do at the highest level. Most of the companies all own the same brands. They're just trying to get brand loyalty acknowledged across one of the brands. So I think that the technology is going to lead the way in that regard. One of the things that I saw on the BitGo side that I was super impressed with was that their dashboard allows self-custody wallet management that still remains insured and still remains, safe, but it's off exchange. They also allowed in the dashboard hot wallet management. So if you just think about the amalgamation of innovation that's taking place on all of these fronts, and you can't even keep up with it. It's like everybody's doing, and there's standard best practices that are being created inside of all of these four-walled companies like Coinbase, like BitGo, like all of them, really all of them. As time takes place, that all of those best practices are going to be consolidated into the best practice, and then that will be distributed as a software suite, or essentially be commoditized across the biggest players to give the users what they want and give all of those liquidity pockets interconnectivity. And that's, I don't know how long that's going to take, but it's happening a lot faster than I anticipated, and I probably am on the bleeding edge of anticipation on that front. And there's companies that I'm getting exposed to on a daily basis that are literally paving the way in some of these areas. So it's crazy to me how fast the market moves and how impossible it is, even though we're on 4 shows a week and talk to everybody that's in the industry, you still can't keep up with it all. It's really remarkable. It's fun to be in.
Yeah, and it's not even so much the what Andrew was saying there with the connection with Coinbase and JPM. It's not even that for that sake. It's because what does that allow forward, which I think is what Tillman was getting toward, which was now you have this whole integration of suites. Now you can offer more products and different products to a bigger base. And, it just, what Andrew said, I mean, that's the thing that gets it going, right? That's the big news, the biggest news coming for the next 5 years, because it allows everything else to happen on top of it, right?
Yeah, it's the base layer of the shift in technology that will end up having all of these intended or not or unintended consequences, right?
Yeah.
If you're seeing, 7 to 10 years from now, you're starting to notice, oh man, that used to be a bank branch. It's not anymore. Like what happened? And
the Pizza Hut down the street is now a Mexican restaurant.
And then you hearken back and you remember, oh, wait a minute. That's because I do everything wallet to wallet and it's all interoperable with JP Morgan, PNC, Bank of America, all of these, banking institutions that we use on a day-to-day basis. It all works together. And when you need to, get a meaningful amount of capital to somebody for a purchase of some sort, whether you're at a jewelry store or whether it's this or that or other, 7 to 10 years from now, it's going to be stablecoin based because their bank is set up that way. So I'd
say 2 to 3 years personally. I think that's happening. It's the most impressive feature of the blockchain compared to other forms of payment. I remember this when I first got exposed to Bitcoin. This will age me a little bit, but I was really into eBay. Loved eBay. And one of the hard things about eBay was, let's say you bought a car on eBay. There was no social scoring mechanism other than their sales record that you could judge them off of, which I think Facebook Market is an improvement on that because you can go on their profile and kind of see what kind of person they are. But there was this trust issue is the point. And then you had even one layer below eBay was Craigslist. And by God, if you were using Craigslist, you
Come on.
better be meeting in the police parking lot, basically. And so there's this real fundamental problem with money. And here it is. That all of the form.
Oh,
there it was, and he went off.
yeah. The eBay cabal cut him off.
That's what it was. It's a
The
big
eBay Craigslist mafia cut him off. So, by the way, it's hilarious. There are some comedians that do really great bits about like their wives, selling an old chair for $8 on Facebook Marketplace, and then somebody comes to their house and their front door to pay them $8, and the risk associated with that, it could be a murderer or something.
insane, right?
Yeah, just absolutely nuts. But the fact that we have, like for example, the SEC chair and the CFTC, chair and staff all working together now on these processes, right? It is they're wanting to turbo boost the pace and speed at which we make these changes. And
listen, you're supposed to keep the plate warm for me and talk about what I was talking about so that I don't have to
we laughed about Nate Bergese talking about his wife, selling something for $5 on Facebook Marketplace, like a potential murderer showing up.
Correct. Yeah. It's like
$5.
Yeah. Well, here's what I was saying. There's a problem with money that crypto solved, and here's the problem: that all forms of instant settlement required trust. It means that if I wanted to settle a transaction with you, there was a major trust need that had to take place. Why? Well, because all forms of payment that I can instantly settle with you require me to be face-to-face with you. And I have to trust you to be face-to-face with you because you can rob me if we're face-to-face. Crypto, it changed those rules. You can now settle instantly, and you don't have to trust the counterparty to settle. And so that is the disruptive nature of crypto. That is the fundamental reason why this will be adopted, because all of these financial instruments, securities, real world assets, right? They allow you to collateralize things that are then instantly settled. What does that mean? It means when I don't pay my bill, they literally can digitally come into my house and digitally take their collateral out. If I can't afford furniture and I go down to one of those furniture places where I can rent it, what are those rental furniture places called?
Rent to own type thing, like
rent to own furniture place,
like that, I think.
Well, you know what? They have a real big problem with collecting on the furniture that's not being paid for. And the problem is they have to come in my house and I might have guns. And so the collateral collection process is a very big friction point in settlement of transactions. And Bitcoin and blockchain have proven to the financial geniuses of the world that now they can collect on their collateral a lot easier than they ever have collected before. That is the frictionless economy that we've been waiting for, and it comes with such ease in terms of settlement times and convenience for us, and secure on the guise of security, because now I don't have to trust anybody, and I've got integration of services and multi-sig wallets and third-party, a lot of these real world assets are going to have kind of what we would in the real world call an escrow agent, right? And that's even being solved too. Like there's a lot of protocols that have gotten recent attention because they have oracles, and an oracle is that. An oracle is a real world person that has collateral at stake to verify data. And if I verify wrong data, I lose my collateral. So I have an economic incentive to tell the truth as it pertains to the data that I'm putting on chain. And if I put bad data on chain that costs people money, they take my money to pay them. So those Oracle systems are now being integrated, and it will bridge the gap to where the collateralization of even hard assets and tangible things will eventually make it on chain. It's just a much more difficult process to integrate technically. But securities and me using my Bitcoin to buy a house and them sending me fiat, and then if I don't pay my mortgage, they just take my Bitcoin. That's happening now because they want the Bitcoin used. That's they're lenders at the end of the day. They just want collateral that they can collect on and then turn into money to make good on the loan.
Exactly. Now, I mean, I definitely think one of the physical things we'll be seeing sooner probably rather than later is your car note, right? Get your car note on a smart contract and whatnot, and you don't pay it, and now you've got AI robotics kind of stuff where it calls your car back in. Think Tesla, right? Next thing you know, your car's taken off without you. It's heading out, or maybe they put it to work and
or maybe they just have a kill switch where you can't use it until you pay your bill, right? It's like they give up on collection because it's a depreciatory. There's all sorts of disruptive natures to this, right?
Yeah, it'll be a good time. I mean, for better or for worse, like you said, the things we've been waiting for, now they're here, and all of a sudden people are like, well, maybe I don't exactly like this anymore. I'm losing more control over the things that I had control over before.
Convenience and control, they're opposing curves, Hey,
how about them Red Raiders, man? I gotta put that up in this show. How about them Red Raiders?
Who are the Red Raiders?
Oh, come on, man. Don't play hate. Don't play hate.
Aren't y'all playing James Madison in the first round? Is that good? That's the lineup, isn't it?
Is it?
No, aren't they they're in the top 4, so they don't play anybody.
Yeah, the top 4, right? Yeah.
Oh, okay. I thought maybe they were on the same level from a program perspective, so they paired them up. So,
what's UT doing? That's all I got to ask. What's UT doing, man?
UT is redefining taking out of conference. UT is changing the world, like we say. What starts here changes the world. The playoff system won't ever be the same, I can assure you.
You can't even just give it a little bit of love, can you, man?
We got screwed, man. What are you talking? Oh, let me ask you a question, okay? Is the last game of the season more relevant and indicative of the progress a team's made and the level of play that they're able to produce during the playoffs, or is the first game of the season more indicative of that?
I would say the entire season itself is what's important.
And that's why you're not a statistician at heart, because you just told a big lie publicly. That there is no universe where more recent data is less relevant than older data. That just, it doesn't apply in mathematics. I'm sorry. So my point is that why would we ever take another Ohio State opener? Why are we incentivized to doing that? Because there's not a universe that exists where a 2-loss Texas team with one of the losses being, to a top 4 team. Why are we not in the playoffs then? Well, you see what I'm saying? It just doesn't make sense.
I see what you're saying, but at the same time, you don't have to be hateful, man.
Listen, all I'm saying is if the playoffs are trying to put the best teams into a competitive environment to see who is teams? Well, that's what my point is. Then what are we playing for? We've even ruined college football with a trophy for everyone policy here. I mean, what are we doing?
It's just
James Madison is playing for the national championship, guys.
You know what they're doing. It's all about money.
That is really stupid. James Madison, being involved in. Who's the other group of 5 that's in there? James Madison and somebody else, isn't there?
I can't even remember, honestly, because it's not real. It's just not real. Here's the way to solve the problem. I know we're beards and Bitcoin, but let's solve another industry's issues for a second.
Beards and pork skins.
Tillman Holloway saw Texas go play Ohio State, season opener. Tillman Holloway saw us play 2 out-of-conference games this year, right? We're at a 16-team playoff. All we have to do is stop playing out-of-conference games and add 2 more games to the playoffs, which takes us from 16 to 32, 32 to 64. Same thing as basketball. And then if I'm sorry, but if you're the 65th team, you just suck. So you just can't make it. But think about it. You would get a lot of James Madisons in the 64 teams, right? You'd be lower in the bar, low enough to where you'd get inclusion at a level to where, let's just hypothetically say at a smaller school, a non-power program, they put together some freaking holy grail group of kids that can win it. Great, they can go win it. And we're going to go, remember back in 2042, the one team like James Madison that's ever won, actually. That's great for the sport. Great, do it. But just stop playing stupid games that don't mean anything that you get punished for, and just expand the playoff system. And by the way, again, for like natural law systems, can you imagine what the contract on the TV side of a 64? The March Madness is the biggest TV contract that exists. You do that for college football, and we blow those numbers off the
I've always wondered why
map.
they haven't actually pushed that yet. So, I do agree with you with that,
Well, congratulations to Texas Tech for representing the state of Texas in the playoffs. I will say that. I hope y'all, if you lose, you burn the stadium down like you do when you lose to us. So,
oh my gosh. So FOMC decision, guys, in an hour. What do you think?
Quarter basis point,
If they don't, the stadium will be burned down.
All the stadiums will be burned down if they don't.
I think this one's pretty priced in, as I guess.
The bigger question, I think, is Jerome Powell afterward, his presser. Do you think he leans dovish or do you think he leans hawkish?
Well, I think he plays coy like he always does, and just uses mixed messages to confuse everyone.
I just think it's interesting that the likes of Kalshi and Polymarket are in the top 10 of downloaded apps in the world. And that's where you really play the game associated with the FOMC thing. So you can make a bet on what's going to be the first sentence out of Powell's mouth when he steps up to the dais for the post meeting.
Did you see Brian Armstrong's response to that?
Yeah, and then he did a bunch of things, right? So I've heard Jeff Park say a bunch of times that you kind of have to turn the way that you're going to get alpha on a go forward basis. You almost have to embrace the idea of a little bit of gambling, right? Like that's the way of the world right now. And these gambling sites, the Polymarkets of the world, they have gotten so big, man, like so big. They've overtaken DraftKings. They've overtaken FanDuel.
It's
right?
hilarious. So listen, they've again broken the rules of markets, and that when you do that, it creates a lot of fun. Brian Armstrong, just for all the people who did not hear it, he was on his quarterly call. They're a publicly traded company. This isn't like little stuff. Like, they're on the quarterly call, public call, millions of listeners, recorded, going to be published forever. And one of his staffers, I guess, found out about a Polymarket list of words. And there were different words that had different odds against him saying it in the quarterly call. And some of the words were like, molasses, and it was like 1,000 to 1 odds. And I don't know if Brian caught wind of it and knew what he was doing, or if somebody passed it along to him, but Brian just started reading the words on the list, and people were scoring big and winning big, and it turned into a big thing. It was pretty funny.
Well, and just underneath the layer of that story is the fact that Coinbase took a big position in the betting site Kalshi. And so Kalshi is now integrated into Coinbase. Yeah. Right. So Kalshi is in second place behind Polymarket as the betting everything. Betting.
How do you spell that?
KALSPHI.
Yeah.
Just like it
sounds. So that wasn't talked about, but it should have been, and it's very, very interesting. In fact, I'd have to go look back because they did that transaction like middle or somewhere in November. So he may have given those remarks and done that with a prediction market before they announced that. By the way, that would make sense. I would kind of keep them out hot water probably. But obviously he would know that they're involved in conversations with Kalshi at that point. So interesting that
I just found it to be incredibly irreverent and funny as heck. I mean, the fact that you just, reading off random words basically to give people paydays, that's pretty funny.
Yeah, definitely once in a lifetime thing we're going to see there.
If anybody wants to start a poly market, beards and Bitcoin, odds of word, I'll read the words out. Just send me the list.
We're telling you now, guys. I'll read the words out. Telling you now.
Supercalifragilisticexpialidocious. That's a 1,000,000 to 1 word there, buddy.
And it was said 3 times. No. But yeah, no, I mean, so here we are. I mean, at the end of the day, as I said earlier, technology advances exponentially. And at this point we're in here, it's advancing so quickly that most people are just going to wake up one day and go, what the heck happened? All of a sudden they're doing this thing. And even though they lived through it, getting to that point, it happened so quickly and so many things are happening at one time. And that really opens up the future. And I think as far as markets go, that does affect the markets a bit differently. If you've got hyper financialization going on, your markets are not going to act the same way they've acted prior to it. They're not going to act the way they acted 100 years ago.
It teaches you things. I mean, even this cycle has taught me a lot. Every single cycle I've thought, well, utility's around the corner. People will finally get utility. No, they don't. They don't care about utility unless it's easy. They care about ease. That's all they care about. So until it becomes easy, no one gives a rip. And if it's not easy and they use it for 5 minutes, they will actually never use it again because they have in their mind made up that it's not easy. And think about how many people have already made up in their mind that Bitcoin's not easy or crypto is not easy. And those will be the people that are using it and they don't even know they're using it. And it's just because it's built into the fabric of things. I mean, when you go on Coinbase and you go lend money, you're participating in DeFi, and most people have never participated in DeFi. Most DeFi has been so hard to participate in that you really have to try, and you burn yourself a lot doing it. It's like, it's a very dangerous endeavor if you don't know what you're doing.
Well, and it was the same issue, again with Bitcoin and other cryptocurrency wallets, 10 years ago. Again, it was this whole thing. That's one thing I said when I came into the space in 2017, in January 2017, I was talking into 2018, just starting getting going, publicly. And I said, listen, the one thing that Bitcoin and other cryptos really need is they need ease of use. People need to be able to use it and not be so scared that, oh my God, if I send it and I screw it up. Because remember, we were all typing out. There wasn't even copy and paste back then. We were typing.
Even like minor shifts scared the heck out of you. I remember when they implemented SegWit, and I was like, "What? None of the addresses now start with a 1. They all start with a B." And now I have to pick between networks. And I honestly and I was deep in it at that point. I was thinking, man, y'all are making this harder than it needs to be. Well, they had to innovate to a point where then they could package all that difficult software into a user interface that makes it easy for the user. And we've lived that at Arch Public. Like that's a difficult thing to do. I mean, when you're trying to break into a sector that doesn't have the rails technologically to man, you got to create them. So it's just one of those refinements in markets and maturity in markets that in hindsight you kind of feel stupid. Honestly, I do. I'm serious because in 2017. I thought we were at the real world assets. I thought NFTs were going to be car titles. But then you go back and if you've ever dealt with any of the NFT networks, They were the hardest things in the world to navigate. So, it's kind of like, how stupid was I to think that the average person was going to put up with that is the point. It has to be super easy for
It
people
does.
to
Yeah.
to use it.
Yeah.
What were
Exactly.
I can't even remember some of the biggest platforms for NFTs.
Nifty Gateway, Rarible.
Nifty Gateway. So Jim and I bought Nifty Gateway.
Yeah.
I can't imagine what the volume is.
OpenSea was the biggest, and they still are the biggest. OpenSea is good.
I can't imagine what the volume on Nifty Gateway is on a monthly basis right now. It's probably nearly nothing.
Well, here's what's crazy is like some of the companies had really brilliant tech too. Like Rarible had this model where, it was an NFT network where you could own a Rarible token that would enable you to profit share on the transactions of the marketplace. Like really great stuff. And it worked. But NFTs didn't create a use case that was sustainable. And because art is only as sexy as, how much you can make off the last guy. You know what I mean? And
so many
just not
times
sustainable.
the tech is just too early.
It's too early. That's right.
Sometimes the tech is just too early. I've used this example so many times. Like, at least I do in our family. Like, we use Instacart and Amazon and DoorDash like crazy. Like, literally, like, we get packages every single day. And that idea and portions of that tech existed during the .com craze. Like, there was a company called Webvan, which was and what you did is you did Webvan and you said, go get me these groceries and bring them to me. Now, they were probably in about 4 cities at that point. But that idea is quite literally what is, revolutionized one of the biggest 5 companies on the planet right now, Amazon.
Well, look at Napster and Apple Music, or look at, it's shit like Spotify. Technology kills dinosaurs, is what it does. And
yeah, it's so sometimes sometimes the tech is just too early, right?
Hey, this is a pretty laid back show. You can unbutton that top button if you need to. I
really like it. It makes me feel thinner, if I'm being honest. Yeah.
My quarterback at Texas was one of the quarterbacks was Chris Sims, and his whole he has a podcast. His whole is Chris unbuttoned.
Oh.
But he always buttons. So it's yeah.
I'm not that lame. I'm not lame enough.
Not yet anyway.
Hey, we got to jump to a fun call. So
all right.
Yeah. Great show. Really appreciate you joining as always. And everybody else coming in again. We'll be back next week. We're coming up to the to Christmas, so sweet. Good times with that, right? Yeah. Anyway, as always, remember the only thing you can control.
I totally forgot. You actually got me on that one. And
so much fun. Listen, guys, y'all trade safe out there. Have a great day. Have a great week. And we'll see you next Wednesday. Take care, everybody. Thanks, guys.
See you, man.
Yeah.
Trading tip: always manage risk before chasing gains.